Good morning and welcome to Stock Market Today. It's Tuesday, May 28th, 2019, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. And if you head over to chaikinanalytics.com/today, you'll sign up for a free email. Follow along with this show. Get daily stock ideas in your inbox every trading day before the market opens. I hope that everybody had a great 3-day weekend to kick off summer, and now we'll dive right back into it. So U.S. equities were higher in Friday's trading, finishing off the best levels of the day, and the indexes posted losses for the week, now down for a third consecutive week in a row for the S&P 500. Consumer staples and utilities were the only sector decliners on the day. Financials, materials, and energy did outperform. Treasuries were weaker with some curve flattening. The dollar was weaker versus the yen and the euro on the day on Friday. Gold finished down 10 basis points. WTI crude settled up 1.2% after dropping by nearly 6% on Thursday. So we get to the desk this morning. Futures are down about 10 basis points after finishing, again, lower for a third consecutive week last week. Asian markets were mostly higher overnight, with China outperforming. European markets are largely on the defensive here this morning. Treasuries are stronger across the curve, with the 10-year yield falling to 19-month lows, below 2.3% here in the early going this morning. The dollar is lagging the yen, but is better against the euro and against sterling. So we'll continue to watch the yen in particular for signs of risk sentiment in the marketplace. Gold is slightly weaker. WTI crude is up over 1%. As we dive right in, we can see so far we're holding support. We've drawn the line in the sand. I cleaned this one up. I wanted to make it simple here this morning. That level between 27.75 and 2800 is our level. That is the support zone. So far, we're holding at 2800 for now. We've got the rising 200-day moving average at 27.76 and then 2800. Resistance, 2900 to 2950. We've called it out numerous times. So we want to see now, and I'm asking the question, is will the RSI break above 50? Should the RSI continue to churn down below this 50 level, that would be a sign that momentum is shifting in favor of the bears, and that would increase the likelihood that support at 27.75, 2800 gives way. At the same time, Chaikin money flow is bullish but declining, and we'll note it did not confirm at the highs. When the market tried to break out here to new all-time highs, Chaikin money flow made a lower high relative to its previous peak. That's a non-confirmation. That's a bearish divergence. Now we're seeing Chaikin money flow begin to move back towards the zero line, so it's something we need to keep an eye on. The indicators are weakening, not fully broken down yet, but are weakening. Market continues to hold above support at 2800, 27.75 to 2800, so we will continue to watch that. Not a ton changed. That's just the line in the sand. We're going to watch it here this morning. Our market in a minute. What are we talking about in our note to Chaikin Analytics clients? Trade remains a concern as U.S. investors return from the long weekend. Defensive sectors of the market shine amid uncertainty. We'll take a look at what that means a little bit later in the show. Technology remains a key focus, and it's holding a bullish relative trend for now. We'll look at that. 10-year yield breaks below 2.3%, hits a 19-month low. Futures point to a slightly lower open here today. Major indices now from a power bar perspective, still bullish. Dow's even, 5 bulls to 5 bears after adding 51 basis points on Friday. 106 bulls to 93 bears for the S&P 500. NASDAQ, an underperformer. Tech's been under pressure. 21 bulls to 19 bears. Small caps regain a bullish ratio. Remember on Friday, this was a bearish ratio. Back to a bullish ratio with small caps rallying by nearly 1%. Rare bout of outperformance for the small caps there on Friday. Bonds uptick slightly, and as we said, they're rallying again here this morning with 10-year yield pushing below 2.3%. According to the Chaikin Power Bar, small cap stocks and large cap stocks remain somewhat bullish. Major markets are mixed. Our stock of the day today, Densply Sirona, ticker symbol XRAY. Closed at 53.75, flat on the day on Friday. Chaikin Power Gauge rating for Densply is very bullish due to very strong price volume activity. Very positive expert activity and strong earnings performance. 20 factors, 5 in each of these 4 categories, give us our rating. Very bullish stock, strong trend, but a weak industry group. Okay, so we'll start to look at it. We check the boxes. It's a weight of the evidence approach. Very bullish stock, outperforming the market. Market and model are in agreement. Dynamic duo are in gear here to the bullish side, and the stock has now moved to an oversold position based on our overbought, oversold indicator. At the same time, Chaikin money flow is intensely bullish. Some of the highest ratings we've seen in the past 12 months. Stock is above price-based support at the $50 level, above a rising long-term trend line. Had a nice gap higher after their earnings announcement beat expectations a couple of weeks ago, and it looks like we're consolidating those gains. This looks like a type of name you want to own. Right? Market is choppy, but holding above support. We don't know if support's going to break. We can take away to the evidence approach. We can look at everything that's going on. But as long as the market is holding above that key support level, we want to continue to focus on our process of buying very bullish stocks or bullish stocks that are outperforming the market that become oversold with bullish money flow. This one fits the bill. You can see solid support here at the $50 level. I think if you're a little bit more on the aggressive side, you want to start to add some names to the portfolio here, you could take a look at Densply, ticker symbol XRAY, for your bullish consideration here this morning. Taking a look at our sector tracker now. Look at the movement of the major sectors over the last 5 days. Certainly paints or continues to paint a defensive picture. Right? The 3 groups that are higher over the past 5 days, utilities, healthcare, and real estate, all have defensive properties. Utilities and real estate also being helped by that decline in yields. Financial staples, industrials, and materials are middle of the road. Again, staples outperformance. The market was down over 1% over the past 5 days. Staples down 40 basis points. So there is some outperformance there. Again, defensive properties. Energy continues to be a weak group, continues to be a group we don't like. We've been bearish on energy. I've been pounding the table. You should not be looking in energy for long ideas at this time. That continues to be the case. And tech obviously remains the key sector. We're going to take a look a little bit deeper at that one later in the show. It has been under a lot of pressure since the trade tensions began. One of the key sectors of focus, and obviously a key sector for bullish investors because it is such a large weight in the S&P 500. So to the extent that tech is under pressure, it becomes a headwind for the S&P 500 to continue to move higher. Now, within tech, we've got to look for our winners, our losers, our relative strength work. We continue to follow our process. Industry in focus today is within tech, software and services, which by now you should know I have been a bull on. And that continues to be the case because over the past 6 months, this group has outperformed the S&P 500 by 13%. And its power bar ratio, which measures future potential, is strong with more bullish than bearish stocks. It's currently ranked number 7 of 21 subsectors that we look at. So top third of the industry group. Some of the indicative names there, all with very bullish Chaikin power gauge ratings: Leidos, LDOS, Synopsys, SNPS, and CACI, CACI International, all have very bullish Chaikin power gauge ratings. And for those of you who are Chaikin Analytics clients and read Mark Chaikin's Market Insights note on Sunday afternoon, you will recognize Synopsys. It's his bullish stock of the week this week, and for good reason. We're going to walk through the process of how we would identify Synopsys as a bullish stock of the week. Power gauge rating is very bullish. We check that box. Strong trend in a strong industry group. Should provide some tailwinds. Market and model are in agreement here. Very bullish rating from the Chaikin power gauge is met with outperformance relative to the SPY. Very bullish stock outperforming the market. Becomes oversold with bullish money flow above a rising long-term trend line. Folks, that's the setup. When we speak about our process and the way we look at stocks and the way we focus on long ideas, leading stocks in leading parts of the market that are outperforming. This one checks all the boxes. Mark went out and made it his bullish stock of the week in his Market Insights note on Sunday afternoon. Take a look at Synopsys, SNPS on the long side of the portfolio. Look at what's trending now. Friday's gainers and losers in the S&P 500. TSS, Total System Services, is being, well, the rumor on Friday was that GPN was going to buy them, and that was confirmed this morning, $21 billion deal. Sent TSS up by nearly 14% on Friday. GPN up by nearly 4%, going along for the ride. Investors like what they heard. Intuit up 6.7% on the day following their earnings announcement. CenturyLink caught an upgrade, sent that stock higher by nearly 5%, 4.66%. Hewlett Packard's earnings sent that stock higher by 4.4% on the day. Loser side of the board, Foot Locker. Foot Locker hit hard, down nearly 16% following their earnings announcement. Remember, the shoe space gets the athletic shoes are made in China. So a bit of a trade tension trade there as well. Autodesk, earnings sent that stock lower by nearly 5%. BHGE, Baker Hughes GE, didn't see any real news to send that stock lower by 3.7%. Stars, STZ caught a downgrade, lower by 3.65%. And Qualcomm followed through to the downside. Remember, some antitrust issues surfacing late last week. Stock's been under pressure as well because the semis are under pressure with the trade tensions in China. Qualcomm following through to the downside on Friday to the tune of about 3%. Let's take a look at yields here. 10-year yield breaks 2.3% for this morning. Here's that TNX below the 50-day moving average, below the 200-day moving average, in a clear downtrend. Now testing support. Now we've broken support at 2.35. That we highlighted. So now we're looking at support in this kind of 2.25% area for the 10-year. RSI of the yield firmly in bearish ranges. Notice rallies cannot get much above 60 while this routinely becomes oversold. That is momentum confirmation to the downtrend that we're seeing here in yields. I thought we might see a little bit more of a backup than we did after we tested support back here. But we promptly have turned lower again. Remember, we've been saying the path of least resistance from a trend perspective for yields is lower, and that continues to be the case. We'll see if support holds here in the near time to try to change that narrative, but so far we have to stick to our trends. Downtrend confirmed by momentum increases the odds that the trend lower will continue. That has helped utilities break their relative downtrend. Here's XLU relative to the SPY, and you can see it was in a bit of a downtrend, but holding above support, and we've now broken back above. At the same time, on an absolute basis, utilities have busted to an all-time high. Now, I don't like this candle here. A little bit of a shooting star for you Japanese candlestick pattern folks. But we are still above the breakout level of 59. And remember, we were highlighting 57 as, clear support. Remember, we were saying as long as the XLU holds 57, you want to stick with it. You want to look for opportunity to enter trades in utilities. That strategy has served you well. And now with the group outperforming again, that continues to be the case for the time being. Near term, could we see a little bit of a pullback? Of course we can. But as long as we're holding in this 57 to 59 zone, I think you want to be looking for long ideas within utilities, especially given our view that rates are likely headed lower. Real estate, absolute and relative breakouts as well. XLRE, here's XLRE on an absolute basis above the rising 200-day moving average. After making a high, went into this little bit of a consolidation and now broke out. Again, I don't like this candle, so we want to see if the breakout level holds. Chaikin money flow is bullish, but we've also broken out on a relative basis. Here's XLRE relative to the SPY, also breaking to new 52-week highs. So we have absolute and relative strength in the defensive parts of the market. That speaks to risk off in the marketplace. It's being aided by the fact that yields continue to come in. Pretty much, if you've been following this show for any length of time, pretty much playing out according to what we've been talking about and in line with our thesis. Technology sees a large trade tension impact. Here's XLK on an absolute basis. We have to start asking if this was a false breakout. So far, too early to tell. We're holding above the rising 200-day moving average, and we're holding within this support zone. Chaikin money flow is just now ever so slightly above the zero line. So that's something we want to keep an eye on from an absolute perspective. And on a relative basis, you can see this nice uptrend here is being tested. Bullish investors want to see tech turn and turn quickly. We won't want to see a relative breakdown. We don't want to see money flow go negative. And we certainly don't want to see a break of the 200-day moving average on an absolute basis, because that to me would increase the odds that the market breaks below 2,800. This is the largest weight in the group. So it's something that we are obviously watching very closely and will continue to monitor on a daily and intraday basis. So that's going to wrap it up for today. Head over to chaikinanalytics.com/today. Sign up for that email. You can follow along with this show. Daily stock ideas hit your inbox every trading day for you to consider before the market opens. I will be back here tomorrow. Welcome back from the long weekend, everyone.